Hello friends, this is Groovy here for Yarcrypto.com, and today I have a very special tutorial for you guys, and it's a trading tutorial. And what I'm gonna talk to you guys about today is the Relative Strength Index, the RSI. The RSI is a tool that many people use. It's one of the most useful tools out there, and it's one of the most used tools out there as well. Me myself, I trade a lot using the RSI. So I'm gonna tell you guys all about the RSI, how it works, what it is, and also how you can use the RSI on your trading setups and on your trading strategies as well. So you guys gonna learn how to read the indicator, and I hope that you guys enjoy it and that I'm able to help you guys with some knowledge here. Also, guys, I'm gonna have all the timestamps on the description of the video, so if you guys want to jump to any part of the tutorial, you can feel free to do so. So let's start. First of all, what is the Relative Strength Index? So in essence, the RSI is a momentum indicator. So it measures how the price is doing, the momentum of the price, and this indicator is used to evaluate the price condition of a certain asset or stock. It can signal divergences, reversals, pullbacks, and trends on the price. And this is measured by following a range between 0 and 100 on a line graph. And furthermore, the 30 and the 70 levels are also relevant zones. Okay, so I'm gonna show you guys here how it actually looks on the chart. So if you take a look here, this is the chart for BTC 4 hour. And if you guys pay attention to this chart here, we have the RSI on the bottom here. And as you guys can see, we have a range here from 0 on the bottom all the way up to 100. And we also have this purple zone here, which is indicated first by the 70 line on the top here and the 30 line on the bottom here. And also we have the middle line, which is the 50 on the middle here. Okay. And if you guys take a look at this, usually the RSI follows the price. So if the price is going down, usually the RSI is going down as well. There are some situations where it doesn't happen, but we're going to talk about that a little bit further. And if you take a look here, usually the price usually fluctuates between the 30 on the bottom and the 70 on the top here. And sometimes it can get below or a little above these levels, but it doesn't usually do that. Usually it fluctuates between these two zones, and we're going to talk about that as well. And continuing on here, I have usually the RSI indicates the overbought or oversold conditions in the stock or asset based on the closing prices. Okay, so usually overbought or oversold conditions are when the price is overextended in a particular direction, and that is indicated by the closing of the candles. So whether it is a 1 hour candle or a 4 hour candle, the RSI usually follows the closing prices. Okay, so moving on, I have some general ideas here. And the first thing is, although the RSI can potentially tell us when the price is overextended in a certain direction, it is not a guarantee that the price is going to move in a particular trajectory right away. Okay, guys? So it's very important that you don't use the RSI as a lone indicator when you are trading because it only gives us a warning of a possible move on the price. Okay, it's not a given. And additionally, higher time frames can usually signal bigger moves. Okay, so usually a 1 hour time frame is gonna signal a type of movement, but a 4 hour or a daily or even a weekly time frame is gonna usually signal a very larger move on the price. Okay, so moving on, the first thing that I want to talk about here is the oversold conditions. Okay, so the oversold condition usually uh, there are two levels of reference to determine whether the stock or asset is or overbought or oversold. The 30 and the 70 line, which I mentioned in the beginning. So in the case of the oversold condition, when the RSI is below the 30 range, it's considered oversold. And that means that the selling pressure pushed the price too far down, and we could see a bounce from the current position that we are at. Okay. However, the price can stay in oversold territory for longer periods of time. All right. So I have a few examples here of this, if I can show you guys. So the first one is this chart here that I have on BTC for our chart. And if you guys take a quick look at the price action here, you see that the price was trending lower here in this move. You see that we came down, and we came down all the way down to here. And if you take a look at the RSI at this point that I highlighted on the chart here, you see that the RSI is below the 30 line over here, below the purple zone as well. And this means that the price is oversold in this range here. And if you guys take a look here, right as we hit this oversold area, the price moved to the upside. Okay, so the price being in an oversold position on the RSI signaled that there could be a reversal, and it happened, so we moved up to the upside. Okay, however, I also have this chart over here, and if you guys take a look here, you see that we have this big move to the downside on the price. And it comes to a point where the RSI, if you take a look down here, it reaches the oversold condition, so below the 30 line. Okay, so you see here. But if we look at the price at the same time it did that up here, you see that the price, it kind of reacted a little bit to it, but it kept trending lower, even with the RSI as oversold. And the RSI kept coming back to that oversold area as a result of that. Okay, so this is something to keep in mind, guys. And this also contributes to the idea of actually using other uh, indications along with this for you to actually make a trade or a decision on the market. Okay, so coming back here, we also have our overbought conditions. Okay, so it's the same principle, but when the RSI is above 70 range, in this case, it's considered overbought. That means the buying pressure pushed the price too high up, and we could see a retracement or a reversal to the downside in this case. However, the price can stay in overbought territory for longer periods of time. Okay, so I also have a few examples of this right here. The first one is this one. So if you take a look at the chart here, this is BTC 1 hour, and the price came up to this point right here, and as you guys can see, when we hit this point in the chart, the RSI here was signaling that we were overbought. So as you guys can see, we got past the 70 line here, and the price came down after that. Okay, so I have another example here as well, and this one is actually on the 4 hour on BTC. And if you pay attention to the chart here, you see that the RSI came to a point where it went above the 70 line right here. So it was overbought. And if you take a look at the price action at the same time, you see that the price kept trending higher over here, and the RSI kept moving to the oversold area for a lot more times, and eventually we hit a point where the price came back and reversed after that. All right. So this is another example of situations where the price is still moving up even after we hit a overbought state. Okay, so how to actually use the RSI in your trading strategies. Okay, the RSI can be used to determine potential good conditions for buying and selling. Okay, however, it's also important for us to consider the sentiment of the market when we are trading. And what is the sentiment of the market? It's basically if the market is bullish or if the market is bearish at a particular point in time. Okay, so usually in downtrends or bearish periods, the RSI struggles to get above the 50 line. So we're talking about the 50 line here at this moment. And in uptrends or bullish periods, on the other hand, the RSI struggles to get below the 50 line. Okay, so I have a few examples here as well. So the first chart here that I have is for BTC 4-hour chart, and I highlighted this part of the chart here for you guys. And because as you guys can see, we have a clear downtrend on the price here. If you take a look, we have constant lower highs here and lower lows as well. So this is a downtrend. And if you compare the price action to the RSI here, you see that the RSI is constantly below the 50 line. And even if it tries to get above it, usually it just comes back down after that. Okay, so this is something that usually happens in bearish periods like this. The RSI keeps trending in the lower part here of the RSI, and it never gets above the 50 line. And as you guys can see, once we break that structure, the RSI gets above the 50 and we move on from there. All right. On the other hand, we have bullish periods. So if you guys take a look at this chart here, we have a clear uptrend on the price. The price is moving up. And if you guys take a look at the RSI down here, the RSI is constantly above the 50 line. So in this general move here, the price just fluctuates between the 70 and the 50 line. And every time it hits the 50 line, it just bounces and comes back to the 70 line or above. All right, so this is another example of a trend and how the RSI behaves in these types of environments. All right, so continuing on here, we have some trading setups for you guys. So there are some things that we should keep in mind when we want to trade using the RSI. Okay, the most important thing when trading with the RSI is looking for confluence. Okay, the RSI should not be used by itself in a trade. Although you can use the RSI in some trades and it can give you positive results, usually we want a more successful trade and we want to be as safe as possible. All right, so usually we want to use the RSI along with other indications such as support and resistance, Fibonacci retracements, for example, patterns such as triangles or channels, and others as well. So any indicator that you like to use as well, this is going to be safer and more confident on your trades as well, so you can be more confident in the setup that you are using. So I have a few examples here of how to actually use it. And if we come back here, the first thing that I want to talk about with you guys is this chart here. Okay, so there's a lot going on in this chart, but if you guys take a look here, I have a few things highlighted. And the first thing is that I made a Fibonacci retracement on this chart. And usually Fibonacci retracements are made by taking it from a swing high. So in this case, this swing high over here, all the way down to a swing low. And in this case, this swing low down here. Okay, so this is the first thing that we want to note here. And when we make the Fibonacci retracement, we get a bunch of lines here of potential support and resistance. Okay, so if you take a look at the price action now, you see that we move up on the price and we reach this point here. And by this point here, we reach the 78.6% level on the Fibonacci retracement. If you look at this side right here. Okay, so this is a resistance zone that we hit. And right as the price hits this resistance zone in this area here, take a look at the RSI, what it does. We also hit a overbought state on the RSI. So this is confluent, not only with the RSI, but with the resistance area as well. And after we hit the overbought state on the RSI, you see that the price get a reverse on the trend and we start trending lower after that. All right, so this is a very clear example of confluence using Fibonacci retracements and the RSI altogether. Another thing here is this example here, and this is Ethereum 4-hour chart. If you guys take a look here, we see that the price was coming up here and we hit this level and then we retraced back, right? So after we reached this point here and we traded back to the downside, this point now, it should act as a resistance zone for us. So as you guys can see, we trade here and eventually we come back into the zone here. And since this is now a resistance level, we hit this resistance level. At the same time, the RSI hits a overbought state over here. And after that, we trend down from this point. You can see that the price even tries to get back into this level, but it just gets rejected again, and we just trend lower after that. Okay, so this is another example of a support and resistance confluence with the RSI as well. Okay, so always look for confluence when you are trading with the RSI for you to have the safest and most probable trade that you can make. Another thing that is very important with the RSI is the divergences. Okay, and this is one of my favorite things about the RSI, and I always use these kinds of setups for my trading strategies, which is divergences. So the RSI can also signal divergences between the price action and the indicator, usually resulting in a reversal, bounce, or a retracement to a particular direction. And there are bullish and bearish divergences. And furthermore, there are two types of divergences. Okay, so there are the normal divergences, which are the classic ones and the standard ones, and there are hidden divergences as well. So let's take a look at it. First of all, bullish divergences. What are bullish divergences? The normal bullish divergences, they happen when the price makes a lower low and the RSI makes a higher low. Okay, so this is basically a contradiction between what the price is doing and what the indicator is doing. Okay, so in the case of normal bullish divergences, let's take a look at the charts here. And the first example that I have for you guys is this one. This is BTC for our chart, okay? And if you guys take a look at the price action here, the first thing that we can look at is what the price is doing. So we make a low here, and we make a lower low in this area right here that I highlighted for you guys. But if you look at the RSI here, while the price was trending down, the RSI actually made a higher low on the indicator here. So this is a contradiction between the RSI and the price. And while the price is going down, the RSI is showing strength on the buying pressure. And we continue up from here. So we trend, we have a bounce or a reversal, and we continue to the upside. Okay, so this is the first example of a bullish divergence happening on the price. And if we take a look here, the hidden bullish divergences, they happen when the price makes a higher low, but the RSI makes a lower low. All right, so let's take a look at that and see how it is on the chart. So in this chart here, we also have Bitcoin 4 hour. And pay attention to this kind of price action here. If you look at the RSI first, you see that the RSI is making a lower low. So the RSI is trending down. But if you look at the price here, you see that the price is contradicting what the RSI is doing, and the price is actually showing strength, and it made a higher low in this case here. So also, this is also a contradiction between the price and the RSI. And usually the price continues up after that. Okay, so this is called a hidden bullish divergence, when the price is making a higher low, but the RSI is making a lower low. Usually, I don't trade hidden bullish or hidden bearish divergences that much, but they also play out, as you guys could see on that chart, and it's also useful for your trading setups for sure. So moving on to bearish divergences now, we have first of all the normal bearish divergence. So they happen when the price makes a higher high and the RSI makes a lower high. So looking at the examples here, if we take a look at this chart here, this is BTC daily chart. And if you take a look at the price action here, we made a high in this case here, and we made a higher high in this case here. Okay, so for bearish divergence, guys, instead of looking at the lows, we look at the highs. Okay, so usually for bullish divergences, we look at the lows, but for bearish divergences, we usually look at the highs like this. And if you guys look here, we made a higher high on the price, but the RSI made a lower high. So this is a contradiction as well. And basically what it's showing is that while the price is moving up, the strength of the buying pressure is going down. So it's not enough for the price to keep on going up, and eventually we trade down after that. Okay, so moving on now to the hidden bullish bearish divergences. Usually they happen when the price makes a lower high and the RSI makes a higher high in this case. So I have another example here for you guys. And if you take a look at this chart here, the price action, we are making a lower high on the price action, okay? But the RSI is making a higher high on the on the indicator here. So what this means is, although the RSI is showing some strength here, the price is actually contradicting the RSI, and so the price moves down after that. Okay, so this is a hidden bearish divergence, when the price is doing something different from what the RSI is showing. All right. So yeah, that's basically the types of divergences that we have, guys. And that is basically what I wanted to show to you guys today. I hope I was able to be helpful to you guys, and I hope you guys understood about the RSI and how to read that and how to use it in your trading strategies as well. If you guys have any questions, you can put it in the comments, guys, and I'm gonna gladly respond to you. But yeah, guys, just for a conclusion here, we see that the RSI is one of the most used indicators out there, okay? It helps you analyze market conditions as well as momentum. However, it is of the utmost importance that you combine this indicator with other tools as well, so that you can have the most confidence possible on your strategies. So yeah, guys, always be safe, trade safe, and use all the tools that you have at your disposal so that you can make the most amount of success out of your trades, okay? So yeah, if you guys want to see any more content, guys, you can access yarcrypto.com. We also have our news website, yarcryptonews.com, and also we have our Discord community, where we talk all about crypto related stuff. We do live TA as well every day. So if you guys want to talk, or if you guys want to just hang out, have a good time, learn about crypto, you can consider checking it out if you would like. So yeah, guys, thank you so much for watching again. And this has been Groovy for Yarcrypto, and bye bye.